Welcome to my channel Accounts Accuracy. Let us study depreciation. If you need, you please refer my previous video to understand depreciation in detail. Here I would like to explain with a sum. But before that, a little bit of recap. Depreciation is decline in the value of fixed assets, that is plant and machinery, motor vehicle or any fixed asset of the company. Now, the reason for depreciation, as you know, is constant use, expiry of time, obsolescence and depletion. As we keep using the fixed asset for a longer period of time, because of that the value deteriorates day by day, and that is called as depreciation, which is actually loss for the company. Now there are two methods to calculate depreciation. The first one is straight line method and the second one is written down value method. Straight line method is also called as original cost method or equal installment method, whereas written down value method is also called as diminishing value method or reducing installment method. Why? Because here the depreciation we calculate at a fixed rate, and that too on the original cost of the asset, whereas in diminishing value method we calculate after deducting every year's depreciation. Just understand straight line method with this sum. Here, as I told, depreciation is calculated on original cost. That means it's a straight line method where you have to calculate the depreciation on the original value of the asset. You can see here Ram purchased a machine on 1st October 2017 at a cost of 1,40,000. So this is the amount of the machine. Remember, along with that you need to attach this installment value too, because when we install a machine, whatever the expense occurs with the original cost of machine gets added. So now you can see here the original cost of machine will become 1,50,000 because 1,40,000 was the cost of machine and installation charge, that is 10,000. When we added both, its cost has become 1,50,000. So we need to calculate 10% depreciation on this value of machine, that is 1,50,000. As I told you, installation charge gets attached, gets added to the value of machine. Now, as it was purchased on 1st October and your accounting period is from March to April every year, it's been written here books closed on 31st March every year. Then you have to understand the accounting period starts from 1st April to 31st March. That means 12 months, and that starts from April to March. Hence, here in 2017, when the machine was purchased, from 1st October till 31st March, the machine was used only for 6 months, not for the whole year. So that's why the depreciation will be charged for 6 months. And remember here, when the machine was purchased, cash went out. So that's why to bank would be written either to bank or to cash. Generally we write to bank because use amount is paid by the check. Now, as the installation charge was 10,000 and 150 is the total value, we have to calculate depreciation like this: 1,50,000 into 10 by 100, that means 10% of depreciation on original value of machine, into 6 by 12, the time period for which it's been used. The total value of depreciation for the first year will be 7,500. When you will calculate, you will get 7,500. Now, this is the amount of depreciation of 6 months for the first year, that is from 2017 to 2018. Then once you will provide depreciation, you will write by depreciation and the year also. This is very important, that year will be changed. Here in the 2017 the machine was purchased, so 1 year is going to complete in next year, so that's why 2018 would become the year here. And then 31st March. Now, after deducting 7,500 from 1,50,000, the balance which you will get will be 1,42,500, because 7,500 is the value which got reduced from the original value of machine. Now, as the balance of machine has reduced to 1,42,000, it will be carried to the next year, 2018, and again you will write April 1st. Now, from April 1st till March 31st, 2019, will use the machine for the whole year. So that's why the depreciation will be provided for the whole year. In value was 1,50,000 10%, that means 10 by 100 of 1,50,000 would be the depreciation for the second year, that is from April 2001 to March 31st, 2019. The entire year machine was used, so we are providing depreciation for the whole year. And here again you notice that the value of machine got depreciated and the depreciation has been calculated on original value of machine. That means 1,50,000. Now the balance which will be left after deduction of this depreciation will be 1,27,500. When you will deduct from 1,42,500 this depreciation of 15,000, then the balance of machine will be reduced and it will be 1,27,500. Now again for the next year it will be carried forward and the balance which will be brought in 2019 April 1st would be 1,27,900. Diagonally you will again bring it to next year, that is third year. As it's been written that we have to provide the depreciation for 3 years. So now again from April 1st to March 31st 2020 the machine will be used for the whole year. So depreciation will again be provided for the whole year. So that's why on the original value of machine again we will provide the depreciation of 10%. So that will be 1,50,000 into 10 by 100, it will be again 15,000. Here as we are using for the whole year, the depreciation will be 15,000. Now the balance will be carried down by deducting this 15,000 from the balance of 2019, the third year of the machine. So from 1,27,500, when you will deduct this 15,000, your balance of machine will become 1,12,500. So this is the amount which will be of machine after the completion of third year. So we can notice here every year we are depreciating 15,000, that is the fixed value of depreciation on the original value of machine. We are not depreciating it on the reduced value but on the original value of machine. So this is straight line method, and in the first year it's not 15,000, 7,500 because it's not been used for the whole year. Otherwise if it would have been used for whole year, we would have deducted 15,000 only. But as the date of purchase was 1st October, so machine was used only for the 6 months. Hence, its depreciation would only be provided for 6 months. Now, for rest of the 2 years, it was used for full year. So, depreciation was provided 15,000 per year. And on the original value of machine. Straight line method is very easy to understand because we have to just concentrate on original value of the machine and we have to keep check on the number of days for which it's been used. I hope this sum has been understood by you easily, and for understanding the written down value method, please do watch my next video. Till then, bye bye. Thanks for watching.